Hello, welcome to my podcast, Yorkshire Property Partners. In this podcast, we discuss the latest news and trends in the property market in the Yorkshire area. My name is Fiona Conway. I am Director of Fiona Conway & Associates Mortgage Brokers based in Harrogate, and I am your host. Today, I have the pleasure of introducing you to Ben Youatt. Ben is the Business Development Manager at Synergy Commercial Finance. Hi, Ben.
Hi, how are you?
I'm good, thank you. Are you okay?
I'm good, thank you.
Good. Thank you very much for joining us today. It's a pleasure to have you here.
It's a pleasure to be here.
Good, thank you. So would you just like to kick things off just by telling us a little bit about you and about Synergy?
Yeah, absolutely. So I'm a business development manager at Synergy Finance. We are a commercial finance brokerage covering the whole of the UK. We have a large network of appointed representatives. Current standing is 75 different ARs that work for us. We have 300 lenders on our panel, and that's a whole range of any commercial type of lending that's needed. Myself, I worked for a high street bank for 14 years before moving into the brokerage network. So loads of experience talking to underwriters and relationship managers.
Great. Okay. So coming from the bank, you know exactly how, what their criteria is, what they're willing to accept, and how to place a case as well. I think that's the important thing, isn't it?
Yeah, so we write everything up so it's ready to go straight into their underwriters, try and save time and effort on behalf of relationship managers. So it goes straight through them, straight into underwriting, try and make it as quick as possible.
That's the thing. There are quite a lot of delays at the moment with processing. So I think to have a package all ready to go, it just makes it a bit more seamless, doesn't it?
Absolutely, yeah.
Great. Okay. So firstly, would you just like to explain to us what a commercial mortgage is, who would need it, and what kind of sort of properties, developments would that cover?
Yeah. Well, commercial mortgages are very similar to residential, except we have a wider range of things we can put commercial mortgages on. It can be lent to any entity, that's sole traders, partnerships, limited companies, PLCs, they can all take commercial mortgage. It's any borrowing where it's linked to a property for any reason. It can be buy-to-lets, we can do residential portfolios, we can do owner-occupied premises, we can do OpCo-PropCo situations where one company owns it, another company leases it, and they're both owned by the same people. Any company that needs funding, if there is a building available as security that's not their residential address, then we can use a commercial mortgage for it.
Lots of things.
So commercial investment properties, so a company that owns properties that they just lease to other companies, they can be used. You can then release the equity in there to fund other purchases. You can fund machinery. You can fund cash flow. It's the main reason for it is that is the security, and then we can term it longer because it holds its value longer than machines and things hold their value.
Okay, so what tends to be the security then? Or like what kind of properties, developments are you finding are quite popular at the moment?
We're seeing lots of commercial investment properties in rural areas and small towns. So we're seeing estate agents and professionals buying properties to lease out to small shops, small retail units, small office spaces above those types of shops. There's lots of them going around. We even do things like lodges, wood lodges, cabins, things like that. We've got commercial mortgages placed on those. Holiday homes on behalf of the company that have used for staff as incentives. We can do all sorts.
Yeah. Wow. So there's a vast array of reasons why people would want to speak to you, definitely, aren't there?
Yeah, absolutely. And it's easy for us when it's buildings and mortgages that we can do it on, because lenders, as I said, go for longer terms. They'll do first charges, second charges. So.
Yeah, no, that's really good introduction. So in the residential world, I've definitely noticed that in the last couple of years, people are starting to work from home more. Maybe people are, doing online shopping instead of going into shops, which, isn't necessarily a positive thing, but that seems to be the way that things are going. So there's definitely been a shift in the residential world with the type of properties that people are looking for, more family orientated properties with office space, what they're wanting to do with their money, and, the types of mortgages that they're looking at as well. Have you noticed that since COVID in the last couple of years, there's been a shift in the commercial world as well?
There's a few different ways of looking at it. It's been difficult in the sense of city centres. Speaking professionally to people, leases are being dropped by companies. So investment landlords that are in city centres are struggling to fill. So if you are wanting to move into a city centre, you can get a good deal on a lease for office space. Retail wise, your small high street stores, they're really difficult to place at the moment, and we see leases on those are really cheap, which then sometimes are struggling to cover the cost of the building and the mortgage. So if we've got a small high street one-man band that's taken over a shop, the rent isn't going to be high enough to cover the mortgage because the property value is still really high for city centre. So that's making it difficult. So landlords are having to put their own funds against that to fund those types of purchases. That said, if you go in rural or small towns, that's where people are going. People are going for, if you go to a Barb's or something like that, you're going locally instead of city centre ones now. So you're getting those types of professionals moving out to city centres, and they can buy their own premises now instead of having to rent them in city centres. They can buy their own. So we are seeing an increase on that. Online shopping, again, as shops are being closed, it means that storage has to be somewhere. So
of course,
warehouses and sheds, which the last 10 years have always been notoriously difficult to get hold of anyway. They're really expensive, have been for so long. So they get snapped up as soon as they hit the market. And development finance on people building their own or professional developers building sheds. Locally, I'm in Huddersfield, so I'm on the M62. I'm an hour away from Manchester, Leeds, Sheffield. It's ideal place for someone to be situated here. This M62 M1 corridor, if you put a shed up here, you can sell it for a fortune.
Yeah. Would you say that maybe sort of buying in an area like Huddersfield that isn't, a great big city might actually be a cheaper way of doing it instead of buying in Manchester? Would you find that? Or
yeah, absolutely. It's notoriously lower rates, it's lower prices. I think prices are increasing as people are noticing it. And you don't have to travel. Less people are traveling now. So I do a couple of days in my office and I work from home the rest of the time. And I think more and more professionals are doing that. If you go into the city centre, you used to see loads of people walking around, and they're all out. So when you've got your professionals not in there and doing the day-to-day purchases, your haircut, buying food and things, those shops are going to struggle and start moving elsewhere to find a business because you still need those services.
Yeah, no, I agree with you. So you're definitely seeing a shift from maybe the retail outlets that the public would, walk into, the shop fronts. Maybe, it's moving towards the storage spaces so that they can sell their goods online instead.
Yeah. I think there's Amazon buying a lot of property as well at the moment. Amazon seem to be buying big chunks of land around, and they're going to develop their own, but they're notorious for buying sites and not having anything on them at the moment. So if you know where the sites are, there's usually opportunities around them.
Right. Okay. So I suppose, as companies are seeing this as a good time to maybe be purchasing the land, and then in time, when they're ready to, if the business plan shows that they'll need it, then, they will then develop on that land in the future.
Yeah, so you could buy a plot of land and wait for someone to come along and try and purchase it off you, increase the rate of it, or you could develop it and sell it as developed. You could sell it with planning permission on it, but it's meant to be quite simple to get planning permission around the M62 corridor and get those sheds up.
Right. Okay. I suppose as well, like the cost of wood materials is really expensive right now. So maybe, people are thinking, right, okay, we'll buy the land now and hopefully just wait for, prices to decrease a little bit to actually build. Because, we've had quotes for wardrobes and things like that, and they've doubled since, last year. So it's an expensive time to buy a lot of things at the moment.
Yeah, so we deal with manufacturers and builders, and we do funding for those types of companies, and they're seeing a lot of increases, and it means that our lenders are putting higher stress tests on everything, and the cost of everything is going through the roof, and stress testing is getting harder and harder to do. And every lender's got different stress tests they put in place, so trying to find the best lenders why you need someone like us.
Absolutely. I think that is the key. And, I deal with buy-to-lets, and the key thing is the rental income that's going to be achieved. That's what lenders are looking at. People will say to me, "Oh, I don't know if I can afford it because of my pay slips or my bank statements." And yes, lenders will look at that, but the main thing is that rental income that's going to be achieved. And in the residential world, that's usually still okay, because the residential rental market is still very, very strong as well. So unfortunately for people who are wanting to rent, the price of renting is high too at the moment.
Yeah. We get some lenders that won't do certain areas because they've got too much concentration there, so they get worried about certain towns, certain villages. So again, it's knowing that, and knowing when lenders are pulling out of certain sectors and markets that they don't like anymore. You've got some major high street banks that won't touch investment properties, they won't touch retail properties or hospitality, and it's knowing the right ones, because if you've got your bank manager, they're usually your first person you got to speak to. If they don't do it, the answer a lot of times is just no, and we can go back to them and get it through different ways, or we can find you the right lender that does.
Exactly. The beauty of using a broker. Couldn't stress it enough. It's that knowledge. It's that knowledge that's going to save a client so much time. There can be issues, throughout the process. And, if we find out that one lender rejects an application, I think it's great to have somebody on your side, a broker, who can then say, "Don't worry about it. We found this lender that will do it. You'll be okay." It's a great position to be in. It's nice to have that knowledge and be able to share it with people.
Yeah. It's always the good one when you have the initial conversation. You know straight away what lender's going to like it and really like it. But obviously get comparisons to see what else is out there. But knowing instantly to say, "I know lender, they'll do this for you."
Yeah, exactly. It's a nice feeling to have. So I suppose another thing is that in the residential world again, I'm noticing at the moment that fixing interest rates for longer are quite competitive. Lenders do seem to want you to fix for longer right now. So that leads me to think, are your commercial lenders doing the same? Are they sort of leaning towards trying to encourage customers to look for longer term investments instead of the quick fix that's going to make you cash and you can sell it, and move on and invest in something else?
I think their hours are really hedging the bets on it. They don't know where to position it. I think the strange thing about it is we're seeing rates go up quicker than they have for forever, really. The all-time low 15 years, and there's still low rates that we're getting now to what it was prior to that. So I don't think it's time to worry quite yet.
No.
I was looking at a report recently, and they were thinking 2% is going to be the max for a while. But even then, we're seeing fixed rates much higher than that. And they're looking at 3 to 5 years is still sweet spot on it. It's difficult and different with us in commercial, because if you want to move off a variable rate, it's notoriously expensive, because our lenders will want their full arrangement fee. They'll want a full valuation doing. They'll want solicitors to do all the charges. A lot of them won't do their own in-house charges. You're going to have to pay full solicitors' fees on two sides, as well as a full valuation. So they'll want someone to go in and see the property. We don't do AVMs, we don't do desktops.
No, so that's a really good point, actually. But I mean, as a lot of people who are speaking to you will be business people, and I suppose they have to weigh up the figures and the costs of what's the right thing to do. But it just sounds like that could be quite a costly quite a costly thing to do.
Yeah, so unless it's going to be an increased rate, base rate increase of 3-4%, you're not going to see the costs get covered during a fixed rate period of say 5 years. So it's you're kind of stuck at the moment with what you've got, which people have been for a while anyway because of those initial costs.
Yeah. So where do you see things going in the next sort of 3 to 5 years? And any opinion on sort of trends of, how things are looking in the commercial world, or is it difficult to tell?
It's difficult to tell at the moment.
It's uncertain times, isn't it?
Yeah, and it's there's still Brexit hanging over us and the trade deals there. So we do international trading as well for finance, and seeing increases on different imports that weren't there, and there were steady import areas before, and now they're suddenly skyrocketing with their charges. And I think, it's difficult. There'll be more commercial investment properties and more opportunities on that available. There's businesses that are struggling. There will be businesses that will struggle over the next 12 to 24 months. I think we'll see more insolvencies related to increased cost of living and business expenses, and then trying to get that money back. And I think taxes as well are going to be difficult because obviously there's a lot of COVID support that got put out that needs repaying.
Yes.
So, but if you've got solid business and solid business plan, then there's opportunities to work through it.
Yeah, no, absolutely. Well, I feel like we've got a lot of information from you today, Ben. Thank you. It's really interesting to hear more about the commercial world because, as you know, I'm primarily focused on the residential. So it's really interesting to see how sort of the two worlds meet, and also the differences as well between the residential and commercial industries.
Yeah. I think we do very similar things. We buy things for people and work out what they can afford to pay, and that's what we do, and then we place it with lenders.
Absolutely. And it's nice to be in a role where you can try and do the best for people, isn't it? And try to help. That is what I do. It's advice. It's trying to help people and find the best way of getting them what they want. And especially with residential, people have their house, the house in mind that they want. They've got their hopes set on it, and it's up to us to perform, isn't it?
Nobody wants to buy a mortgage; they want to buy a property.
Exactly, that's the thing. If I said to someone, "Would you like a mortgage?" They'd be like, "Not particularly." No. Would you like to buy that gorgeous house over there? Yes, I would.
Yeah, that's the way I always look at it.
I know. Unfortunately, most people have to go through the mortgage process to get that beautiful home, don't they?
Sadly.
Absolutely. So, I mean, is there anything else you want to cover, Ben? You feel like you've said everything you wanted to say, or is there anything else?
No, I think that's everything at the moment. Just come and
Fantastic.
See anything.
Absolutely. Well, this is the thing. The next thing I would just want to ask you is where would be the best place to find out more about you and about Synergy and what you can offer people?
So you can find me on LinkedIn, or you can go to our website, which is afsuk.com/synergy-finance. It's part of a group within another company. So you can find us on there and contact us, and we have regular blogs and updates and things about stuff.
Oh, fantastic. That's good. So it sounds like quite an interactive website then.
Yes, yeah, you can find brokers local to yourself. You can find direct contacts at head office. All the information's on our website, or I respond to a lot of messages on LinkedIn.
Yeah, fantastic. Great. Well, thanks very much for today. It's been a pleasure to see you, and we'll have to meet up face to face again soon, won't we?
I'll meet anyone face to face. I love face to face.
No, exactly. It is. It's that personal touch, isn't it? I don't think it can be replaced.
100% agree.
Lovely. I'll leave you to get on with the rest of your day. Thank you very much.
It's been lovely to speak to you.
Cheers. And you. Bye-bye.